Agnes, umepata? Na hii 2017.
Yeah,
Alright.
Julia Malia is an accounting student on her first week as an intern in Mwenda Police Limited. She prepared the final statement of the account for the company. They did not balance. She thus transferred the difference in a suspense account. The statement of financial position for Mwenda Pole Limited as at 31st November 2017 was as follows. You have the statement of financial position. You have been requested by the chief accountant of Mwenda Pole Limited to find out the cause of the balance in the suspense account. On investigating of the books of account, we discovered the following. Number one, the check of 375,000 from a debtor was correctly and entered in the cash book, but was posted in the wrong side of the debtor's account. The sale day book was overstated by 2,400,000. Motor vehicles were not depreciated for the year ended 31st March 2017. Depreciation is to be provided at the rate of 15% per annum on a reducing balance basis. There were no disposal or acquisition of a motor vehicle during the year. Number four, retained earning as at 1st April 2016 was 43,200,000. Number five, return inward of 1.35 was erroneously encountered in the purchase day book. The trader receivable were overstated with 2.130. The amount of 600,000 was omitted from the trade payable. Discount allowed of 1.35 had been correctly entered in the cash book, but was posted to the credit side of the discount allowed. Cash sale of 6 million was correctly posted on the sales account, but debited in the 12% debentures account. This did not affect the debentures interest paid by the company during the year. Required journal entries to correct the above errors. The suspect's account duly balanced.
See, just income statement and the corrected statement of financial position. So, there is errors which do not affect the trial balance, which we have said that error of omission will not affect the trial balance. If you omit a transaction, the entire transaction, it will not affect either debit or credit. Error of principles. Maybe you debit a wrong account, but you follow the same principle. So that one also will not affect the trial balance. Error of commission. You put it in a wrong side of a wrong account of a different person. So that one will not affect the trial balance. But the error of undercast and overcast will affect the trial balance. So we will have the journals, you write details here. Debit and credit. We have been told you don't need to provide the narration. Narration is not required, but you can provide so that you can know this is which error. Number one, you have been told 375,000 from a debtor was correctly entered in the cash book. So if they have already accounted in the cash book, then we don't need to account again in the cash book, but was posted to the wrong side of the debtor's account. So we should post in which side of the debtor's account? Mohammed, we should post in which side of the debtor's account?
Okay, kindly repeat. I'm not.
Do you have that May 2017 question?
Okay, sorry, I don't have the question.
I'm not asked. I'm not- Agnes, how do we record that transaction? Remember errors in a test, the accounting principles that you have already learned, debit and credit. So it's not a different topic that we are doing it from the scratch. We are just reminding ourselves what we learn about debit and credit. What we learn about debit and credit. The other person when I'm join a Gina. So how do you account for that transaction? First, you ask yourself, they've already accounted in the cash book. On which side of the transaction? And then see, you remember we said there must be debit and credit for every transaction. So they have accounted in which side of the cash book. Customers pays you. So the cash increases, that is an asset. When asset increases, what do? We debit. Now, we are reducing the current asset, which is the receivables or the debtors account, then we should credit. But this person amefanya the same. Debit the cash book at the same time, can debit the debtors account. So what will happen to the side of the debit of your trial balance? It will be overcasted because you have debited twice. Debited twice. I've shared the question. You can check the last page. The last page of that aspect, I think. It is in page 107. Page 107. Page 107. So I will correct that transaction. I will correct that transaction by debiting the correct credit, putting it in the correct side. So debtors account, which another name is account receivable. Account receivable. So I will put it in the correct side. So it should be on the credit side, which is 375. So I will not record again in the cash book since they have been already recorded in the cash book correctly. So which account will affect this? The suspend account. Suspend account. So you bring the suspend account here. Or 375. 375. We have not been told not, or the narration is not necessary, but because it is a class, you can provide that and say correction, or it is overcast. Correction of overcast error. Correction of overcast error. That is number one. That is number one. That's number one. Number two. Number two. Number two is that the sales day book was overcasted by 224. Okay. What is the journal entry for sales? Before even we look at the overcast, what is the journal entry for sales? If I give you 100 shilling sales of 100 shilling, sales of 100 shilling, how do you record the sales of 100 shilling? Yes, 707. Your font na andika MA, AMA, MIS. How do you record the sales of 100 shilling? Yes, Agnes.
You debit You debit it because it's an increase.
These are sales. Before even, what did we say about the definition of financial accounting? You identify the transaction, which already we have identified the transaction, it is here 100. Then you classify the transaction. Is it an income or expense?
It's an income.
It's an income. What did we say about the income? Increase in income, we do what?
We debit.
We are not debiting the income. Why are you debiting the
No,
income?
we credit.
Yes, you credit. Now, so if we are crediting the income, this accountant has overstated the sales, which, assuming it is this one, they have overstated the sales. So which side of the transaction is affected? That is the credit side of the trial balance, because they have recorded more sales. Maybe instead of recording 100, we record around 2.4 million. So we will reverse that overstated value. When we come here, number 2, sales. We debit the sales. We debit the sales to reduce that amount of 400 or no, 2.4 million. And then suspense account, we credit the suspense account. The error, we say correction of overcast. Correction of overcast error. If there is topic which is very easy, any errors, because in a test, it tests the journal entry, debit and credit. Debit and credit. So once you know how to classify the transaction, whether it is an income, expenses, liability, capital, and assets, then it will be very easy for you to know where to debit and where to credit. Now, number three, you have been told that they omitted to recognize a depreciation. They omitted to recognize a depreciation. So depreciation is an expense. So expense, you should debit expense. Increase in expense, debit. So we'll have a depreciation here. Which will be told 15% on reducing balance basis. So when we say on a reducing balance basis, we use the net book value. So get the net book value of the motor vehicle. The cost in your balance sheet there is 85,800. There is accumulated depreciation in column 2 of 16,800. Then there is a net book value of 69,000. So we are going to use 69,000. That is net book value. So 15% of 69,000. 15% of 69,000. Giving us 103. We debit 10,350. Now, depreciation, you credit accumulated depreciation. You credit accumulated depreciation. On the assets account, you can either put accumulated depreciation or the assets account, 1,050. Then to say correction or error of omission. Correction of error of omission. Omission is double F, making the check. So this was number equal number 3. Number 3, we go to number 4. Retained earning. So retained earning we have been given there because of Roman C, adjusted income statement. So retained earning, that is not an error. That is not an error. Just a retained earning. Now we go to note number 5. Return inward of 1.35 was erroneously entered in the purchase playbook. How do we record, without even seeing this error, how do we record the return inward? We debit where, we credit where? Because in this correction of errors, you ask yourself first, how do we record this transaction in the correct way without even seeing the error? How do we record the return inward? How do we record return inward? The journal entries. We debit where, we credit where? We'll be doing it in the balance sheet. Sales less return inward, but you don't know whether it is a debit or credit. Hizo questions zote tumekuwa tukifanya imekuwa na return inward. So we debit where, we credit where? This is the sales which is returning by the customer. First, you have credited that amount. You have credited because it was the same. It was the sales. Now the customer is returning back. What do? You debit. You debit. So in short, we debit the sales account. Then we credit the return inward. We credit the return inward. Even if you go back to your previous questions and then you check the return inwards in your trial balance, you realize it is in the credit side of the trial balance. It is in the credit side of the trial balance. So let's correct that one. Number 4. Return inward. Return inward. Return inward. Was erroneously entered in the return inward. It was erroneously entered in the purchase book. So return inward on the, we have to credit, which it is on the credit side. That is 13. That is the correct entry. And then you should do what? You should debit the sales account. You should debit the sales account. That is, don't write that one, 1350. So this is the correct entry for the return inwards. This is the correct entry for the return inward. But this guy alifanya differently. So instead, ameweka purchases. So we will remove that one by crediting the purchases. So you will credit the purchases to remove that one. You credit the purchases to remove that error. You credit the purchases and debit the sales account. And sales account. Debit the sales account. So the error here is the error of principle, the error of commission. So yeah, instead of debiting the sales account to like a different account. So correction of error of commissions. Even to the principle will fall under that one. That's number 6. Number 5, which is not number 6. The trade receivable were overstated by. So anytime we see overstated or undercasted, the suspense account should be there. So trade receivable Receivable is the current asset. So if the receivable is the current asset, what is the balance or where do we, the balancing figure of the receivable should be on, that is on the debit because it is an asset. So this value now in the debit has been overcasted by 2130. So we have to reduce it by crediting the trade receivable. So we credit the trade receivable to reduce that overcast. So 2130. What natumia all the zeros, eh? 13. Yeah, so we were using all the zeros. And then we debit the suspense account. Overcast. The error here is error of overcast. Error of overcast. It is the error of overcast. We go to note number 8. Number 8 is that discount allowed of 1350 has been correctly entered in the cash book. So which means they have already entered in the cash book. Remember, cash book when we do discount allowed on the credit side, but was posted to the credit side of the discount allowed. So you see, discount allowed is an expense, and we say anytime you increase an expense, you should debit. So this guy amefanya nini? Ame credit. So this is the error of principles. This is the error of principle. So which means the credit side has been overstated because they debited in the cash book and also in the discount allowed. So the credit side has been overstated. The credit side has been overstated. So we have discount allowed. Discount allowed. We debit the discount allowed of 50,000, and then suspend account 50,000. So it is the overcast at the same time the error of principles. Because I follow debit and credit. We cannot record it in another account again, in the cash account, because they have already been recorded twice. So you cannot record it here. And then it seems like you are recording that transaction, and yet we are correcting it. Number 9. Cash of 6 million was correctly posted to the sales account. So which means they have already credited to the sales account, but debited in 12% debenture account, and these do not affect the debenture interest. Cash sales. If you receive cash, this is an asset, so you should debit the cash account, but instead, I can debit the debenture, which is 12%. So we should remove it. So you go to the debenture, the 12%, or we start with a cash account, we debit 6 million, and then we credit the debenture 12%, to remove that. That is, so it's still the error of commission. You follow the correct principles, but you put it in a wrong account. Now, any questions? Any questions with those errors? So you will not miss a question for errors. That's why I started with errors. Because you might not get another time to look for error. And the reason why examiner is most of the time test this error, it is to test you whether you understand the accounting. The accounting. It is all about understanding debit and credit. And also know how to classify transaction, whether it is an asset, expense, or a liability. Now, when opening the suspense account, you will have debit and credit. Balance brought forward, it is on the debit. If you go back to your balance sheet, suspense account in the current assets, it is in the debit. So balance brought forward is in the debit. Let's use all the zeros because upper to all the zeros. So we have 1620,000 as a balance brought forward for the suspense account. Now, anything, if you want a suspense account in the correction year, if it is on the credit year, then it should appear in the debit side here. So, like this one, it is on the credit side. Account affected is the discount allowed. So you come here and write discount allowed. 1350,000. Go back to the other errors. Here too, you're gonna suspend account. Trade receivable, it is on the debit, so we bring it here on the credit. Trade receivable, 2130,000. Trade receivable. Next, with a suspend account is sales. Sales is on the credit, so we bring it here on the debit. Sales or 2.4 million. Next is debtors account, which is also a receivable. So we'll bring it here. Debtors account of 375,000. Now,